BlackRock Company is the biggest investment management company across America. Headquarters of BlackRock can be located in the New York City of US, in objective to provide the fastest and most convenient services to their customers and stakeholders. BlackRock is setting up their branches and offices all over the continent of America, Asia, and Europe. Initially, BlackRock just owned a single office and it started from small and simple office. Until now, BlackRock has their branches and offices in 26 different countries. Lawrence Fink founded BlackRock Company in the year of 1988. In his young age, Lawrence Fink was just an ordinary mortgage bond trader, but he desired own himself a management company. He successfully founded his company with a group of Wall Street investors. Afterwards, in the year of 1999, BlackRock successfully became an international listed company through New York Stock Exchange. Lastly, BlackRock merged with Merrill Lynch to become BlackRock Corporation. Two main investment processes of BlackRock are Multi-Asset Income Fund and DPS BlackRock Mutual Fund. The company investment process started with risk-first approach in their portfolio, and they do not take the risk to own portfolio that the risk is more than 50% and with portfolio built up by mixing of global bonds and stocks. The company also focuses on balancing trade-off between yield and risk that they do not target a certain and fixed distribution for their customers for any given month. The yield of the company's portfolio distributes based on monthly fluctuation. Hedging strategies also taken by the company in to manage the broad risk around interest rates, equity sell-offs, and currency fluctuations. Besides, non-traditional strategies like equity cover all writing and securitized areas of the fixed income market that are not as linked to the corporate credit cycle. Exchange Traded Fund (ETF) by iShares BlackRock are different from normal stock. Normal stock have limited supply and demand decided by investors and making the price of stock become vary, but supply ETF can be increased or decreased based by the demand of it, and price are according to the underlying assets. The price did not fluctuate depending on supply and demand. ETF provided high liquidity compared to other stock when large quantities of securities being sold out or bought in through creation and redemption process. This can lower the risk of the investment and giving good guarantee to their investor. BlackRock is the largest scale of portfolio investment management institutions among other competitors since 2009. Until years of 2016, BlackRock has over 5,000 billion USD of assets and direct owned properties. Through emerging and acquisition, BlackRock had a great leap forward development and slowly building up their kingdom. From 1988 until 1994, BlackRock was under rapid process of development and growth, and until the late of 1994, the properties and assets scale of BlackRock was reaching the value of 53 billion USD. In 1995, BlackRock officially became one of the subsidiary of PNC Financial. With the help of PNC Financial, BlackRock started their steps in assets across different sectors. In 2005, BlackRock purchased State Street Research and Management (SSRM) from MetLife. In 2006, BlackRock also purchased the Merrill Lynch Investment and Stock and Equity Management section. These scale and funds of purchase reaching for 1 trillion USD. In 2009, acquisition of Barclays Global Investors (BGI) did by BlackRock, and this including the most famous service and product BGI, the iShare, and completion of acquisition of BGI lead total skill and assets of BlackRock reaching 3.35 trillion USD and becoming the biggest asset management company across the world. Furthermore, acquisition of Claymore, SEPEP, Credit Suisse, MGPA, and lastly BKCA, making the total assets and equities owned by BlackRock was reaching 5.15 trillion USD in the end of 2016. According to the International Advisor, on the 21st December 2016, Mark Littleton, a former fund manager at BlackRock, has been jailed for 1 year after admitting 2 counts of insider dealing. In a statement, BlackRock reiterated its previous support for enforcement by the FCA against such offences and said that Littleton's behaviour was totally opposite to the firm's principles and values. His sentencing signals the latest in a string of 32 successful prosecutions for insider dealing by the FCA. Richardson's insider dealing involved a gross abuse of the trust placed in him as a senior fund manager. He tried to hide his misconduct through the use of unregistered mobile phones and setting up a company in his wife's maiden name in an overseas jurisdiction. None of these meant he could avoid detection. Richard Turner, BlackRock's global chief investment strategist, together with his team members, features some of the problems which may upset international markets in the quarterly global investment outlook.
So I think the September meeting is not critical in itself. What's important is the indications we get about the future path of monetary policy. We expect to see a tightening of Fed policy either coming in September or more likely in December. But to us, the bigger issue longer run is that interest rates are likely to remain very low for a long time in a historical context. So we're seeing some cyclical short-term upward pressure to interest rates and normalization of interest rates as a result of some recovery in the US economy, some evidence that inflation, wages are picking up. But the long-term picture for interest rates is still extremely low, and it's extremely low because the long-term path of growth for the US economy is weak. Demographics are a significant headwind. Productivity is a significant headwind. And whilst we're seeing some pickup in inflation, it's rising from a very low level. So yes, we think we'll see one interest rate hike most likely later this year, either in September or more likely December. I think investors have to focus longer term. Still a very low interest rate environment.
In their statement concerning about global markets, where they highlighted that it could go out of control if the world's second largest economy depreciate their currency in yuan during its growing expanding foreign reserves. It stated that this might cause some countries to have competitive devaluations, promoting policymakers head out of control and risk assets. In August, China blew markets after devaluating yuan currency, causing Black Monday that erased around $1.6 trillion in only one day from global blue chips. BlackRock supposes that there is only probability that the incident could happen, but due to disparity of China's economy, the risk might come back in the long run.
The devaluation story is really filled with so much political intrigue here, and it's just not up to date that, the Chinese have revalued their currency over the last 4 years or so quite dramatically. And so this degree of undervaluation and currency concerns is really from an earlier period. When we look at what happened over the last couple of days with regards to the currency, in some sense it was just marking to market the currency, what's called the fixing, which is basically how China manages its managed float system, marking its fixing level to where the market was. And the market was anticipating some devaluation. So this is really about opening up and freeing up monetary policy so that it can function, as the question asked, the way that other monetary policy functions.
After the 23rd June referendum, BlackRock also identified Britain's possible quit from the European Union as an aging sport. In the past, BlackRock has mentioned a Brexit would hit exceptional possibility, causing a wave of credit degrades and also spikes in gilt yields, causing government borrowing to increase and decreasing locally focused UK equities and exposing risk in London's property market. Multi-asset strategies are designed to deliver improved outcomes by eliminating traditional investment boundaries and dynamically adjusting portfolios over time. Dynamic diversified growth, a top-down dynamic asset allocating approach that seeks to deliver long-term consistent growth with low volatility and a focus on downside mitigation. Alpha is seen as an estimation of a portfolio administrator's execution. For instance, an 8% return on a growth mutual fund is great when value showcases as a whole are returning 4%. However, it is far less noteworthy when different values are procuring 15%. And alpha is the rate of return that surpasses what the model anticipated. Financial specialists, for the most part, lean toward a venture with a high alpha. The technical equation for measuring alpha is M price plus distribution per share minus start price divide start price. On the off chance that a capital asset pricing model CAPM examination demonstrates that the portfolio ought have earned 5%, yet rather just earn 3%, at the point the alpha of the portfolio would be negative 2%. BlackRock investment strategies include both alpha and beta. Beta, the return generated from a portfolio that can be attributed to overall market returns. Exposure to beta is equivalent to exposure to systematic risk. Beta can be known as beta coefficient, should measure the volatility of a particular security by contrasting it with the execution of a related benchmark over some undefined time frame. Speculators are hoping to perceive how much drawback catch they can anticipate from a venture. CAPM are usually used to measure beta. The benchmark number for alpha is 0, yet the gauge number for beta is 1. A beta of 1 means that the security's value moves precisely as the market moves. On the off chance that the beta is short of 1, the security encounters less serious value swings than the market. On the other hand, a beta over 1 implies that the security's cost is more unpredictable than the market all in all. The equation for beta is covariance of return divide variance of the market's return. The benefits arrival with the markets. Profit of BlackRock comes from stock and equity, fixed income, multiple investments, derivatives, financial market advisor, ETF industry, and cash management and movements. There are several types of fund in BlackRock Company which are BlackRock Global Fund, Global Allocation Fund A2, World Mining Fund A2, Latin American Fund, Emerging Europe Fund, World Energy Fund, and New Energy Fund. The asset management industry has a scale effect. The success of BlackRock is closely linked with its success in capital operation and continuous expansion. Furthermore, BlackRock took the development of index funds and vigorously developed the globalization and multiple strategy index funds, become the world's largest ETF provider. The risk control philosophy and strong technical support throughout its development are important reasons for it pursued by the US government and financial institutions.
Aduh.